Here's everyone. Today I'm going to talk to you about on-chain metrics. It's also called OCTA. So, what I want to talk to you about and give you some perspective, let me fix my hat here. This looks crooked. What I want to give you perspective on is that everyone's getting excited over Bitcoin. I don't need to tell you this unless you've been living under a rock. And Bitcoin, believe it or not, it broke its all-time high twice this week. And I and many other people did not expect that to happen until liquidity was pumped into the system, meaning either the Fed raised its balance sheet or that the Fed lowered the funds rate, the Fed funds rate. And even global liquidity is not rising sharply. Nonetheless, Bitcoin hit its all-time high, broke its all-time high twice this week. Why? Because there's just so much demand from spot ETFs, as you know, of course. So what I want to talk to you about today is that what I'm looking at, the on-chain metrics alone, there's lots of ways of looking at and analyzing Bitcoin and predicting what its price is going to be, stock to flow, sentiment, all kinds of charting, Fibonacci. I mean, there is a lot. I'm just going to focus today. 99% of my focus is going to be on-chain metrics. And then I will show you some sentiment charts. So let's get started because I see a lot of short-term risk. Now, just to be clear to all you degens out there, I am not long-term bearish. I am short-term bearish, meaning during the month of March and April, maybe May, we could see a sharp decline in Bitcoin and crypto. But then I continue to see Bitcoin and crypto going up to the moon. So let's get started. These are examples of all the bearish indicators, all the indicators that you can look at, or some of them, I should say some. There's so many. So the one that are highlighted in yellow are the ones that I'm going to go over today. So we've got, let's go over the ones that are not highlighted today. You can look at internet search trends. You can look at positioning on the CBOE. And there's also, believe it or not, futures on Bitcoin and Ethereum. And I think they've started Solana futures too, and maybe another one. So we've got some kind of markets in futures, but I didn't talk about those specifically in terms of positioning because you have to remember the futures market is new and small for crypto. So you got to be careful because we don't have a long history to look at. And then you can look at a relative strength. It's very high, but we're not going to focus on that today. But when Bitcoin, by the way, in crypto has a high relative strength, it's like a stochastic. It goes up and then it goes down. So that's also negative. But let's just focus on the yellow. So let's get started, meaning the highlighted ones. Okay, the first ones are not OCTA. They're sentiment. So on the left side here, you got the equity fear greed indicator, and you could read a little about that in that box. And on the right side, you've got the fear and greed index for crypto, which includes Bitcoin. Both of them are at greed or extreme greed levels. And let's go to the left chart. The left chart has been at extreme greed for equities. So we already hit that sell point. So just be aware of that. This is the latest data. And so it's gone down a bit, but still very greedy near the extreme greed level. So it's already given a sell signal. So both signals are shown from a contrarian view that we're at a very high risk zone and we should be selling. Number one. And number two, just be aware that there's a long history for these indicators. So, and these indicators have a pretty high accuracy rate. So when they say extreme greed and everyone's celebrating, looking for champagne to toast each other and pat each other on the back, this is the time when you should be selling. Not everything, but taking some chips off the table. So let's get into OCTA. What is OCTA? OCTA is on-chain technical analysis. Some people say that technical analysis is astrology for men. But I say it's a very, very strong way of looking at technical analysis and even combining technical analysis with fundamental analysis because it gives so much information. So I'm not going to read this all to you. I just skim over it. I just want to get a few key points. let's do the first point. One thing I've noticed with all my indicators, and that's just OCTA, you gotta have a consistent set of indicators. So if you don't look at a consistent core set of whatever it is, a half a dozen indicators, one indicator, if you don't look at those indicators consistently over time, you can get swayed over the talking heads on the news or anecdotal news stories from Twitter and X, whatnot. So just have a core set of almost like principles. And one phrase, I don't know if it's a phrase, a quote that I like to mention is from, I think it was first said from Benjamin Disraeli in Israel, the first prime minister of Israel. And it was popularized by Samuel Clemens, Mark Twain. He said, there are three kinds of lies: damned lies, and statistics, meaning you can use stats to manipulate anything. And this is many years ago, before artificial intelligence and fake news. So just think about that, how well ahead of the curve these guys were. So the same goes for OCTA. Just keep us, like I said before, a core set of charts that you understand and you're comfortable with. And one last issue, which only for OCTA, which you need to be aware of, there's a deep flaw in these charts. What happens is some of these talking heads, they'll show you 10, 20, 30, 40, 50 charts. And guess what? They're from the same data set and they're telling you the same story. So you can shrink those numerous charts from 24 charts to one chart because they're looking at the same data set. So be careful. This reminds me of something, if I can pronounce it clearly, called multicollinearity and regression, where your numerous independent variables or charts appear to be showing or confirming what you're seeing through different charts. But like I said, it's one chart. So don't get confused with that. So what I try to do here is I try to group those charts together and give you examples of each one. So let's get started. The first one is a Bitcoin price chart. So here it's shown, and this is not OCTA, of course. What it's shown is that there was some price pressure. I like to look at, you can look at Fibonacci and all kinds of charts. And what's that other guy? There's all these names. I can't remember these guys' names right now. There's another famous one, Elliott Wave, and there's another one besides Fibonacci that people like to look at. What's his name? Tom. I'm losing track of his name. But everyone likes to look at all these different types of, some of them called voodoo, different types of chart formations and different types of charting. Puell also look at dots. He puts dots in these charts and he says they're really accurate. What I look at, especially in this case, is just simple support and resistance. And I said, I did an article and video that there was a lot of resistance here, and it worked. When Bitcoin hit 30,000, it went down short term. And then I said it again, when Bitcoin hit, I forgot what number this is, 48,000, it worked. It was resistance. And now I'm saying there's going to be resistance. Again, these are short-term resistance points. Now I'm saying there's resistance here. It's about 70,000. We haven't hit that yet. But at $70,000, remember, it's a whole number. Always be careful of whole numbers. At whole numbers, there's a lot of limit orders to sell. And what you can get is, because there's a lot of futures and open interest, you can get cascading sells. We get a very quick decline in Bitcoin. Actually, we saw that at 68,000. When it hit 68,000, we had an almost 10% retracement of Bitcoin over only like one day because there was a lot of cascading sells. So just be aware that when and if we hit 70,000, I think it's going to be very soon, there could be a quick sell, a quick cascading of sell orders going through. And one thing I want to say on the previous slide, when Bitcoin declines 10%, you can see a 30% decline in crypto because the beta is much higher for altcoins. So let's go to fundamentals. Usage, and so I'm grouping these in in a name called usage metrics, and I'm only including one chart, and that's active addresses. So you want to see active addresses going up over time. And the blue line is basically the 1 year trend line. So you want to see that going up, and it tends to go down and flatten during bear markets, during crypto winters. And you saw that in the 2018-19 crypto winter, and in the 2022 and whatever 2023 crypto winter. But here's the problem. Here's what I'm worried with. I'm not worried about the flat blue line, and I'm not even worried about the red line. That's a short-term 30-day moving average of active addresses. I'm not even worried about that declining below the blue line if it's during a crypto winter. But we're in a bull market. If you look here on the right side, where my pointer is, you can see the red line, the 30-day moving average, is below the 365-day moving average, meaning we're not seeing growth in active addresses despite of us being a bull market since October of 2023. So that's a very scary statistic, or chart data, I should say. So it's very scary, and I think this is going to be yet another example of why Bitcoin's price and crypto's price is going to decline rapidly. People could go back after this happens, playing Monday Night Football. They're going to say this is why Bitcoin went down. There wasn't enough usage. Next chart, I'm going to speak fast because we're running out of time. These are profitability charts, and there's like a million of them. I'm just going to focus on a few. So this is the chart that a lot of people look at. It's called the MVRV ratio. Not only do people look at this chart, they look at derivations of this chart, meaning the Z-score, meaning standard deviation. I'm simply looking at the simple MVRV ratio. This comes out of Crypto Quant. So the data today I'm going to be presenting to you is from Crypto Quant, Glassnode, which provides lots of data, and Look into Bitcoin. And Willie Wool also shows this data. So the area that's dangerous, where it's light pink up here, but I would argue with you the data that's dangerous is actually beginning when the MVR ratio is above 2.7, 2.8, and that's where we are right now. You can see when we hit that red line, we're at local tops or major tops. So we're at a danger zone. All right, next chart. This chart is the NUPL chart, net unrealized profit loss. So I'm stressing the word unrealized because we also have a realized chart, and they all tell the same story. So when this line, this blue line, crosses the red line, that's one standard deviation, that's when people get very hungry to sell. So I think there's a lot of long-term investors that are selling, so long-term whales are selling now. And we've got short-term holders that they're getting itchy to sell. But they're not selling and going to cash. They're selling, I believe, and going into meme coins and altcoins. So if you look at the red line here, when we crossed it, we had local tops and major tops. So this is at a very dangerous sell signal. Again, another profitability chart. It's a little complicated. It's called VDD, value days destroyed. And I'm going to read to you this. I put this text here. Extreme value days destroyed levels are highlighted by red candles on the chart when the score is 2.9 or higher. This has only occurred at 5% of Bitcoin's history, only 5% of the time. But even that yellow line, you can see, I'm not sure if you can see this skinny yellow line. We're already at a high level, about to reach the red level of 2.9. So even when we reach the orange level, which is above let's just say we're above 2.5, that already is a major local top. Remember, I'm looking for local tops. I am not looking for the top of the Bitcoin crypto cycle. That's probably not going to happen until next year. But right now, it looks like we're at extreme risk of a local top in Bitcoin and crypto declining rapidly based on this chart. Next one. Now we're switching our hat and we're changing into the options into the derivatives market. You can look at options, futures, funding rates, the put-to-call ratio. So let's talk about the options interest expense. This not option interest expense, options open interest on all exchanges. We already reached an all-time high of $20 billion. This means that we're a major top because people are speculating. And if you look at futures, we're not at an we're not at an all-time high, but we're pretty close to it. And you know why? In my opinion, we're not at an all-time high because FTX/Alameda went bankrupt in November 2022. And remember, FTX was a large contributor of open interest because they were a futures exchange. They did a lot of funny stuff and a lot of perp selling. I don't know if you remember this or if you know of this, but they would bring or be a major venture capital because they had the Alameda research component. They would be a major funder of some of these ICOs, and then with one hand, and then on the other hand, they'd be selling futures on those coins. So they went bust, and when they went bust, the open interest disappeared. So in my opinion, if FTX was around, we'd already be at all-time highs. So this is a major sell signal. And I don't know if you know about funding rates on perps, but basically when funding rates go up, and we're at a pretty high level, when funding rates are at a high level, that means investors are desperate to pay up for those long futures positions. So again, we're talking about speculation. So this is a sell signal. Now we're switching our hats, or taking off our hats, and talking about centralized exchanges. Now just remember, don't get confused, because I did. This is not the level, the absolute level of coins on exchanges. That's been going down over time. This is volatility of coins on exchanges, and we're reaching a very high level of that, both from short-term holders and long-term holders. And you can read here, even from Coinbase, Glassnode is saying that since January of this year, there has been over $2 billion per day in short-term holders depositing onto exchanges like Coinbase. And we don't like that. We don't like when there's a lot of buying, especially from short-term retail holders, because these are just people that get into altcoins at market tops. And now we're going to switch our hat again and talk about, let's make it like this. We're going to talk about the supply of Bitcoin from miners. Because remember, miners are what contribute to the supply of Bitcoin because they mine Bitcoin. And so this is the Puell multiple invented by David Puell. He's now working at ARK Invest, if you want to look at his research. And so when this multiple reaches two or higher, in my opinion, which is where we are now, that's at a dangerous point. And this is basically showing you momentum. You can look up the definition on your own, but it's basically showing you the value of coins being sold by these miners versus divided by the 65-day value of those coins. So it's basically at a sell level. And you can look at the definition on your own from looking to Bitcoin. Other bearish indicators, so this is not an on-chain metric. This is like outside of that. And this is whale selling. There's a lot of whales that start to sell. And I'm not going to show you a chart for that. But what I will show you is that the U.S. government is probably the number one holder of Bitcoin. And you could see they've seized $17 billion of Bitcoin. And they're still holding $8.4 billion of Bitcoin. And they've started to sell this Bitcoin this year. And, other bearish anecdotes. I know I said not to look at anecdotes, but we need to look at the fundamental anecdotes, which means liquidity and rates. And what the Fed is saying, Jay Powell, by the way, just testified in the House and in the Senate. And he continued to say, he's been saying this since last year, that rates going to remain higher for longer. That's his message. He's been hammering this message. And he's saying that, yes, rates are going to go down, but they're not going to go down until he sees inflation near that key 2% level. So this is probably not going to occur until at least June, maybe even later, maybe towards September. And this is going to be a very dangerous thing for him, because he's got to be careful, because he doesn't want to look like he's being political, because remember, we have the election coming up. So I don't think he's going to lower. He wants to lower rates, reduce rates, I think, around the election, but he's not going to do that. He may do that before the election, so he does not look too political. So maybe in June, July, he'll lower rates. Conclusion: beware the Ides of March. And if you know what the Ides of March is, that was said in a Shakespearean play from a seer. A seer said that to Julius Caesar. He said, beware of the Ides of March. And that's the middle of March, when the full moon is out. Beware of that. And I say the same thing for Bitcoin. However, the long-term case for Bitcoin is stronger than ever. Why? We have 16 million coins. These are long-term holdings being hodled for dear life. And this includes at least 3 million coins, 3 to 6 million coins. We don't know how many exactly, that are lost. Obviously, if they're lost, they cannot be sold. And there's only 21 million in total max supply. So there's only about, something like 4 million coins that are out there that could be bought and sold. So there's a supply squeeze. And remember, speaking of supply squeeze, miners aren't producing enough coins to quench the never-ending demand from spot ETFs. Remember, the SEC approved multiple spot ETFs, from ARK, Wisdom, BlackRock. So those ETFs are buying up billions and billions of dollars worth of Bitcoin, and it hasn't stopped. So what do I have to? I'm going to leave you with this. This is what I'm going to say to you. I'm going to leave you with my own formula from Economics 101. It's less supply plus rising demand equals moon. We're going to the moon. So what I'm saying is, beware the Ides of March, caveat emptor. But after that correction, I think we're going to the moon. Well, thank you all for listening, and don't forget to subscribe to us and smash that like button. Bye-bye.